Hey guys, Mike here. So another jam-packed video for you today, and I'm gonna go into something one of you guys asked me about in the comments, and go through that when you had a question about this rally and banks and things like that. So I'm gonna show you that, and then of course we'll go into the charts because some stocks have some huge days, but the indexes were kind of like, yeah, just kind of traded sideways. I'll show you what a liquidity grab looks like as well. Saw that in the middle of the day, which, you know, some of you guys will find that interesting. And then I'll go into a rant at the very end here and get your thoughts on that. But first, you know, if you look at this right here, since obviously we're really focused on employment right now, one of the things that usually leads the way on employment, or you see get actually acts first, is the temporary help, right? And so you can see we've been turning over, obviously, since you really 2022, as you can see. But right here, you can see the rate right there. That is below zero now. And you can see there was obviously a recession. And so, of course, this usually leads the way down. And so, because that's the first people you're going to ask first, right, is the temporary help. And so we'll see if that's going to mean anything, because remember, it still is a tight labor market at this point in time, and one that we've never seen, but we'll pay close attention to it. So keep that in mind. Now, something I looked at today, and you gotta admit, boy, this is definitely interesting, and in a way it makes sense, in a way it don't make sense. And we're gonna get an update on this Friday. This is the University of Michigan Consumer Sentiment. You can see going all the way back to the 80s, right? Where we've had recessions, we've had bad markets, you've had the great financial crisis and everything, and you can see where consumer sentiment was during all of this. And right now, today, we are lower than all of those times, and we ain't even had an official recession yet, right? I mean, people are still working and paying and traveling and doing gambling, doing all kinds of stuff, right? So that is just amazing to see. Let me know what you think about that in the comments. Are you one of those people that fills out that survey or whatever, and do you feel the same way? But I mean, can you imagine if it's that low now? It's kind of like, it's usually a contrarian indicator when it gets that really low that you're going to have a pop back up in the market. But again, this is one of those a year first, right? This is just one of those boxes to check and say, yep, that's strange to see that now. You figure you see it later on. Now, I'm always going to update you guys on this when I can, but percentage of sector and index members above the 200-day moving average. What I found funny was, look at really what's kind of leading the way here, right? Utilities, consumer staples, look at healthcare right there. NASDAQ 100, of course. Why is that? Because the top 10 stocks, that's why, right? And then you got industrials, because everybody says everything's doing bad in industrials, but nope, they're up 63% of the 200-year moving average. And what's funny is 90% of stocks in the utility sector are above their 50-day moving average, right? And there's consumer discretionary. And so it's funny to see the defensive stocks doing so well. And for those who don't know what defensives are, that's utilities, consumer staples, and healthcare. Right? These sectors are considered essentially and typically maintain their income streams and overall stability, even when the market is volatile. And so that's why big money plows into them. And that leads me into what one of you guys asked me in the comments was about the NASDAQ Bank Index. And so, and hey, can we have an actual sustained rally if banks aren't participating in stuff? And so I looked, back over the last recessions and bear markets in the 21st century, and you can see right here what's going on. Obviously, the Qs are rallying up. This bank NASDAQ index looks terrible, but you can see, I mean, 2020, yeah, banks moved, the bank index moved up. So did the QQQ, 2019 right there, 2018-19 during that crash. You can see the same thing happen right there. And this don't look like much, but that's like a 25% move. So it just doesn't look like a big move. But we go back to 2016. We had that sell-off, 2015, 2016. Same thing. You see a move up. Go back to 2011 when we had the debt ceiling issue going on. And you can see right here, moved up again. Same thing on the Qs. 08, obviously you can see right there. And that doesn't look like much, but if you measure that out, that's a 68% move. So, and these are banks, so they're going to move like the Qs or anything. But, and again, the last one, the .com, you can see the same thing. We bought them right there. Boom, and end up moving up. And if you're liking this video, guys, please hit that like and subscribe button. That will be the thumbs up right below the video there. Just go ahead and hit that for me. I sure do appreciate it and all your support. And if you like this kind of content, think about subscribing. And so, can we have a sustained rally or whatever? Or that be the bottom? Or we're going to just fly up or whatever? You know what? It's a year first, right? I mean, usually people tell you banks kind of lead the way or whatever, but hey, I mean, at this point in time, it's almost hard to predict, right? I just showed you consumer sentiment. I showed you so many other indicators say, oof, normally you don't see this. But again, what's going on? The business cycle is totally screwed up right now. That's what's happening. It just I looked at it today and I was like, wait a minute, what? Looking at where defensive sectors are being leading the way here, and all of a sudden here's these other stocks leading the way too, and that's way back here in the business cycle. It should be happening, right? And I've never seen such a big debate as like, where are we at in the business cycle? Bonds should be going up. Are we in phase one? I've been trying to figure it out for 6 months. Like, let me know in the comments if you come up with it and actually have proof or whatever. But it's just everybody's still guessing, because when you shut down the world, that's right, you mess with the business cycle or the economic cycle, whichever one you want to look at it as. But that's the way it is. And so could it happen? I guess so. Because could banks also stage a comeback? Sure. I mean, look what happened today, which I thought was interesting, by the way. In pre-market, PACW was up. It was over 7 something. So I think it was up like 20 to 30%. It was another big rally going on in pre-market. All of these stocks were up. And I was like, oh boy, it's been another big day, And then for whatever reason, they just sold off in the middle of the day. So, and I think there was some news coming out about like, what's the unrealized losses, things of this nature. And I haven't been able to confirm it, so I'm not even going to put it up on the screen. But, you can see the DPSD, which is a triple leverage ETF in this. It was actually green, but it went red. So I thought that was interesting. Let me know in the comments if you found anything about that. I can't find a source, a legitimate source I believe in, or at least 2, that actually quote as far as the unrealized losses that these banks are actually reporting. I mean, we knew it was in the trillions if you look at all banks, but I mean, again, it's unrealized, so that doesn't hurt them unless they actually have to sell, right? And so now that puts us into some charts here, right? And this is the SPY. This is a little liquidity grab I was talking about. This is the gains that take place during the day. Top part is the supply zone where you see selling. Bottom gray box right there is demand, where people start buying. And you can see this right here. All of a sudden, boom, just a massive drop down. It looks massive. It's really not. But it's about 0.4% in a matter of 5 minutes. I mean, it was just boom, 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 one candle after the other out of nowhere, really. And then, of course, right away, what happens? Ends up coming right back up. So 5-minute drop down, and I believe it was a 12-minute move back up to get back to where we started, right back in that supply zone. So that was a lot of stop losses triggered, things of that nature, but just like a quick liquidity grab, and boom, back up we go. See you later. And so it's amazing how the game works. And so I thought a couple of you get a good kick out of that, because I know some of you have been asking me, what's a liquidity grab? What are the supply and demand zones? Stuff like that. It's easy. Just look on a 15-minute chart. Is what I like to do, and just scroll across, and you'll see it's amazing how many points hit at the same point before they start to sell off, or hit the same point when they're coming down and bounce back up, right? And then with the gaps, some of you guys have been asking about the gaps. I don't have to do a video on this. It's just simple. For example, Palantir will open up with a gap tomorrow. It reported earnings. I think it's up like 25% after hours. So let's say it closed at 7. It opens at 9. There's your gap. Right, same way with, I think PayPal is down right now, but let's say PayPal reports terrible earnings, and they close at 75, they open at 70, right? That is a gap, okay? 90% of gaps eventually fill. A lot of those are filled on crashes, right? That's when it usually happens. That's why that stat is so skewed like that. But also, they're just like, gaps are like magnets a lot of times, right? And now, looking at the Qs, it keeps moving up in this rising wedge right here, as you can see. On the 4-hour chart, again, those are 3 gaps below. So usually, if it breaks, we'll definitely probably fill those 3 gaps, because they're not that far apart at all. So that's actually not a huge drop you'd have to take to fill those gaps when you're looking at it overall. And you can see the RSI obviously keeps saying, should go lower, should go lower. It doesn't always work out with this divergence, but it's definitely telling us something. Now, AMD had a huge day today. Look at those 3 candles. Right, since we got above that year-to-date anchor VWAP, ton of volume, and you can see going to a shorter time frame here in the hourly, definitely overbought. So maybe it gets a pullback. It definitely seems like it should. Seems like it's getting up into one of those supply areas right there. But we'll see on that one. Because like I said the other day, semiconductors are going to do what semiconductors want to do. And of course, what else happened? NVDA new 52-week high. Understand it's right here, this area right here of March. So it breaks above that. That's going to be bullish to keep moving. Will probably be resistance, but again, we'll see. And the all-time high is right there at 347. So, just put in the comments if you think we're going to reach that. At this point in time, I'm tired of counting it out. But again, here you got this wedge moving up, and they don't even report earnings for another couple weeks here. So we'll see if it continues to move. A lot of people just keep thinking it's going to come down. I keep thinking eventually just have some form of weakness. And again, that's why I was asking for weeks in that one segment there. Was that accumulation or distribution? Well, obviously right now it was accumulation, not distribution. If it was distribution, we'd be selling off. And so that leads us into earnings. And tomorrow, Lord have mercy, it's going to be a lot, right? A lot of high beta stuff is going to be reporting tomorrow. And so you can see Nikola, Pfister, AMC Networks, EVgo. Then you look over to the right in the afternoon, it's going to be extremely, extremely busy, right? With Airbnb, all about the traveling. Rivian, Oxy, which got hit because Warren Buffett doesn't want the controlling interest. Twilio, Affirm, and Upstart. That's the buy now, pay later, and supposedly that's actually doing decent. We'll see how the earnings come out. Then we'll have Win, see if we're traveling, and then of course the others you can see down there as well. And then that leads me into my rant. And you know how I feel about politicians to begin with, but I found funny was here you got Warren Buffett and Charlie Munger this weekend talking, and I found this little quick blurb here, each of them like 30 seconds apiece. They were actually asked about the debt ceiling, because that's something else we got coming up. People have kind of forgotten about that, but we got that coming up. And here's what they had to say, and then I'll tell you what I got to say about it.
It would probably be the most asinine, act that Congress which ever performed. At one time in Indiana, back in the 1890s, I think they passed a bill. I know it was introduced. You can look it up on a search engine. They passed a bill to change the value of pi, the mathematical term pi, to an even 3, because they said it would be easier for the school children to work with. Well, that's the only bill I can think of that would give competition to a refusal to raise the debt ceiling. I do think, I remember an era when we had a bipartisan foreign policy and all that, and I liked that era. And that was the Marshall Plan, and a lot of wonderful constructive things were done. And they were generous things. Now it seems to me that both parties are trying to compete to see who can be the most stupid. And they keep topping one another.
And I ain't sure how you feel, put in the comments, but I couldn't agree with them more. I mean, they're absolutely right. And for those who don't understand, all it is a stunt. Both parties do it. Whoever is the president, if it's a Republican, the Democrat's going to do it. If it's a Democrat, the Republican's going to do it. I understand the debt ceiling isn't about new spending. It's already stuff we've already said we're going to spend on, right? It's already our obligations that we have to cover, right? And it's the ramifications are so big that the fact they even play around with this mess, and they have months to get this figured out, and you get these idiots that like to wait to the last second, right? And what they don't understand is what happened in 2011 to us is we got our credit rating downgraded. That's not good, right? And that's why the stock market went, oh my God, right? Because the one thing you don't want to mess with is the confidence in, I guess, the treasuries, the U.S. government, the backing, things like that. You don't want to do that. But these guys that, sit here and win points with their parties and their bases and everything and make them feel good, they're willing to do this. But this should have been handled months ago. And that's what it's crazy to watch how they do this. And they want to bring it up to the last minute. Are you kidding me? And, I heard one of them today go on an interview and it's like, well, we don't have a magic pill for it. We're not really there yet. And I'm like, really? Really? Like, so even if you don't, and I don't think we'll default, but even if you don't default, don't mean you can't get your credit rating downgraded again. That's a big deal too. You got to remember that. I mean, seriously, it's absolutely nuts that they would do this. So, I mean, I'm holding back a lot right now, because trust me, you know how I feel about those people up there. I mean, ain't nothing but grifters as far as I'm concerned. I mean, that's all I think they are, is a bunch of grifters, right? And so, got the best retirement, the best health care. They don't really do anything. I mean, and I always tell people, I always say, because I always say our society is in that moment where it's like so many people don't think for themselves, and they just vote for the R and the D. And then I'll ask people straight to their face, like, what's a piece of legislation that passed that actually helped you? I mean, really, like, financially helped you pay for your kids' college, whatever it is, something like that, like really made a difference, right? Not just took somebody's rights away so it made you feel better because you didn't like that group, or you did this over here, or made the other party look bad. And it's very rare can somebody come up with an answer. Most of them are like, I don't know, I couldn't tell you, and it's like, oh, okay, well, great. But that's what matters to me. It's like, what are you getting done up there? Okay. And so, we'll spend the heck out of defense spending, and we'll cut education to the bone and stuff like that. And it's just a mess. But anyway, that's my rant for the day on that one. Let me know what you think down in the comments. Again, it seems like the market's trying to do what? It's like, it wants to move up, but it's like, wait a minute, what's CPI coming in at? Oh my goodness. And so, and again, you're fighting the CPI on top of the pause, right? The pause. And so I'll talk a little bit more about that tomorrow. But anyway, hope you guys got some out of it. Hit the like, subscribe if you did, guys, and I'll see you tomorrow.